Welcome everyone to Vested Interest. Hey, this is Shane, and before we get into the video, I would like to take a moment to thank everyone who has subscribed to the channel. You guys are awesome. Just over 300 subscribers. The channel continues to grow. You guys continue to tune in. I really never thought it would grow this fast or be something that people would be interested in. But today we are going to take a look at my activity in the portfolio. Love these videos. Every week we take a look at what I purchased for the week, any changes in the portfolio. That's right out in the open. I don't have if you've never been to the channel before, I don't have a paid Patreon account or anything like that. You don't have to go anywhere special to see what I'm doing. On a weekly basis, every Sunday, I put out these portfolio update videos. So go ahead and hit that subscribe button down below. If you like the videos, hit the like button and hit that notification bell so you're notified whenever I upload any new videos. If you're interested in content like that, we do cover dividend growth investing, so that's what you'll see in my portfolio. Now let's jump right in. Again, you can see here on the screen, added $2,706 in new funds into the portfolio. Let's see what we did there. First, we will start off and see if any dividends were paid for the week. So we did have some dividends that came in on October 17th. Store Capital, ticker STOR, is a REIT. They paid out $70.12. Now this did not get automatically reinvested. We did reinvest it, but it didn't automatically go back in and buy more shares of Store because I sold out of Store. Store is being acquired by a different company, so they will no longer be public. This is actually the last dividend that anyone will receive. If you were paid dividends by Store, they are no longer going to be paying them going forward. And eventually, if you haven't already sold your shares will be paid out at the sale price. So that's why you don't see similar to Stag below. Stag is another REIT. This is a monthly paying REIT, ticker STAG. They paid out dividend, and you'll see they automatically dripped dividend reinvestment plan, for those that don't know what that means, back into the portfolio and picked up more shares. So they paid out $13.03, and they bought 0.44598 more shares at $29.21. The drip is still set up so that automatically happens. Any company that pays out dividends automatically, if they're still in the portfolio, Store is not in the portfolio anymore, they will automatically go back in and buy more shares of that company. So that is the activity for October 17th, $83.15 paid out in dividends. Now we'll jump into the first new capital added into the portfolio. We added $1,421.23 on October 19th. This was not the only day that I was adding to the portfolio, but this is just where we got started earlier in the week. So with those funds, we picked up one share of Vale, ticker VALE, for $13.47. This is out of the material sector. This is a mining company. We picked up one share of Realty Income Corp, mining company out of the material sector, if I didn't mention that. Realty Income Corporate, it is a REIT. This is another monthly paying REIT. We saw Stag in the previous slide. They're a monthly paying REIT as well. Ticker O for Realty Income, and we picked up that one share at $58.15. Now we added one share of Procter & Gamble, ticker PG. This is out of the consumer staples sector. We picked up that one share for $131.19. We added three more shares to our position in Cisco Systems, ticker CSCO. We picked up those shares for $41.92. This is out of the information technology sector. Verizon is just continues to decrease in value. So I believe my position is down a little over 20% right now, maybe even pushing 30%. I continue to buy as it continues to go down. I just don't see Verizon going anywhere, and the yield just keeps getting nicer and nicer. So I'm going to continue to buy as it goes down. I don't mind a sale. Eventually I'll get to a position where this is, or to a point where this position is too large, and I'll pull back. But for now, I'm going to continue to add as it pulls back here. I did sell out of Verizon here back when it was in the 40s here a while ago, mid 40s there. But now again, under $40 per share, I'm going to add back to the position and build it back up and collect that 7% dividend yield. So those 6 shares of Verizon, ticker VZ, out of the communication sector, paid $36.94 per share for those. Leggett & Platt, another one that continues to pull back, is down to $31.71 per share. So I picked up 4 more shares there on that day. Ticker LEG for Leggett & Platt, and Leggett & Platt is out of the consumer discretionary sector. Verizon Communications was communications, if you didn't catch that. Bank of America, we added 3 shares, ticker BAC, at $34.15. This is out of the financial sector. Intel Corporation, ticker INTC, we added 14 shares there at $26.02. Another one that continues to drop back. I think it may have even hit down to $25 per share there. So I'll keep adding. I want to build this position out back over 100 shares there. And this is out of the information technology sector. And Whirlpool Corp, we added 2 more shares. So Whirlpool, Intel, Procter & Gamble, and Whirlpool, Intel. So we didn't add any. And UNP, were Union Pacific, were the ones that I was going to add pretty much every week. So Whirlpool, 2 more shares, ticker WHR, as out of the consumer discretionary sector. And we picked up those 2 shares at $138.74. And we weren't done. We went back to work on October 21st, at the end of the week there on Friday. And I just could not ignore Medical Properties Trust. I did a video about this that one of the commenters recommended this for me to take a look at. The only thing I did not like about this company whenever I did that review, I thought they seemed extremely cheap, but I did not like that they were increasing their share count. So this past week, or maybe it was last week, I have kept an eye on these guys, and a article came out. They are actually going to be buying back shares. So this dilution that they were doing is going to reverse course, and they will be buying back shares. So the one thing I didn't like about them has changed. So with them dropping down, they were around $11 last week, and as I watched them, and then as the day kind of drug on there Friday, and I happened to check on them again, and they're down to 10. I think they were down at 1040 whenever I first looked at them. So I put in an order for 100 shares of Medical Properties Trust. This is it. Another REIT. They own medical properties, hospitals, that sort of thing. So ticker MPW. I picked up 100 shares at $10.23. So extremely cheap. I actually think that's right at its 52-week low, which was nice, and it added, I think, like $116 in annual income. It's a little over 11%, so a very nice yielding company right now, and very cheap in my opinion. And if it happens to go down more, I will pick up more, because when I looked at it, the free cash flow is, or the dividend amount paid out is only at about 51-56%, depending on where you look. So I don't mind that. Really like the company, and again, I believe any company in the healthcare sector, even though they are not like a pharmaceutical company, they own the properties, but they're not going anywhere, right? We're an aging population. As people age, they need hospitals more, not less. So I think this is a pretty safe bet, even into the future. And then last up, we picked up more Whirlpool. I think on the previous slide, we saw it at $138 and some change. It continued to drop throughout the week. So again, I don't mind buying what I'm going to buy anyway cheaper. So I picked up 2 more shares at WHR, consumer discretionary, at $131.19. And with the funds we saw on the previous slide, $1,400 and some change, and the $1,285.06 that we added on the 21st, the total invested for the week was what we saw there on the beginning slide, $2,706.29. That's the most I've put into the portfolio in a while. I do have some cash sitting kind of on the sidelines, and whenever I see good buys like this, Medical Properties Trust, if I want to add $1,000 to something, I can do that. I've got about $8,000-9,000 kind of just sitting off in a bank account, which we typically always have a little bit of funds like that, just in case you have a emergency. It's kind of our emergency, but I will from time to time pull it out and put it in the market if I see a good value. So that's why I did that. I believe Medical Properties Trust is a good value currently. I think if it stays under 11, I'll probably continue to add to it as well. All right, we're rambling a little bit here, so let's jump into the next slide. Quick overall portfolio update. Current total value of the portfolio is $86,057.30, which is not really what we're interested in. It's nice to see that it's gone up significantly. I'm not down near as much. I think I'm only down about 7% overall in the whole portfolio. We were down at 10 or 12% at one time. The dividend yield dropped just a little bit because as the portfolio value goes up, the yield tends to go down, right? It's an inverse relationship. So the dividend yield did drop. It was, I think, in the 5.4s last time. It's 5.3400 this week. But anything to me really above 3.8, 3.7, anywhere in there north of 3.7, 3.8, I think it's a very good dividend return. It beats like most ETFs that you can get into, so I'm fine with that. And this is really the most important part. This is what we're looking for: the passive income produced by the portfolio in the form of the dividends paid out by the companies in the portfolio. This continues to grow whether the market's up, down, floating sideways. So long as this snowball keeps on rolling down and getting larger and larger, that's what it's all about. Currently sits at $4,595.72 in annual dividend income. Really, really looking nice. And we'll run through the sector allocations real quick. Communications is sitting at 8.57. Consumer discretionary 7.62. Consumer staples at 6.33. Energy is sitting at 8.51. Financials is they're pretty much tied there. Financials, we'll say the second biggest position there is at 16.41. Healthcare at 10.53. Industrials at 0.90. Technology 10.03. Materials at 14.68. Largest piece of the pie is utilities. We don't have anything in the, nothing in the utility sector. And REITs and real estates is the largest piece of the pie at 16.42% of the portfolio. Don't mind that either. REITs and real estate, some of those positions have come back up a little bit. OHI, for example, we just added NPW, as you saw. So that increased our REITs and real estate position there. But they are some of our higher yielding as well. So don't mind that at all. Now, lastly, we will cover a quick update on the pool. There's a sunrise from actually Saturday morning. You'll see this video on Sunday morning. Usually tape them on Saturday evenings. Make sure I didn't get any last dividend payments out on Friday afternoons. So this is a Saturday morning sunrise. As you can see, the concrete's been poured. I'm going to do some work around the yard here. Some leaves off those trees that you can see have been falling down quite a bit, and then level out some more areas, and then try to get maybe some grass seed replanted. But nice picture there to start the weekend off, and the pool is looking good. The girls really want to get in there one time before we close it up. They're supposed to be coming to clean it, throwing some chemicals, run it for a little bit. I think they said they want to run it for a week or two, and the girls really just want to jump in. I keep telling them to hold on. You can't just jump in a pool. It doesn't have any chemicals or anything. So we'll see. Hopefully the weather stays nice. It's been in the 70s here the last couple days. So with that said, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit the thumbs up. Ring that notification bell. Most importantly, subscribe to the channel. And again, thank you to the 301 subscribers. At least that's what it was. If it's more than that, thank you too. 301 whenever I started recording this video. So really appreciate all of you out there. Thank you so much. Drop a comment down below. Let me know what you think. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, suggestions for future topics. If you have some suggestions, go ahead and drop them down. I do a little bit more of a deep dive. I'll throw together a subscriber request video, or I'll add them to my watch list, and then when they pull back, we can cover them on the stock pick of the day if they happen to pull back on a day. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope to see you soon. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing here for educational and entertainment purposes. Investing involves risk and can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.